So what's going on with DataDog stock, right? I mean, to start the year, the stock soared from around $70 per share all the way up to $90 per share, and then it started to fall from mid-February to the start of this video. It fell from $90 to $67. So it's made a round trip up to 90 down to 67, and you know not much has changed to between the start of the year and now. I know investors enthusiasm was really high in January. I feel that was unjustified. Investors got a little too excited, a little ahead of themselves, and the markets overall increased a little too much in January. And so I felt like that was due for a pullback. That increase was unjustified. And so what we noticed since then is a general decrease in broad market stock prices. I think just back to normal levels to begin the year, a little bit below, as the enthusiasm around maybe the Federal Reserve is not going to increase interest rates that much. Maybe inflation is under control. I think we got a little too optimistic about those two things. And so that can partly explain what was going on with Datadog stock price going up and down, but there's also company specific factors, and that's what I'll get into in this video is looking at the company's fourth quarter earnings call and looking at what the CEO said about the company's prospects, and maybe from that we can gain some insights into what's going on with Datadog stock. So let's get into that part. So Olivier Pomel, the CEO, founder of DataDog, starts off the earnings call, which was held on February 16, saying in Q4 revenue of 469 million was an increase of 44% year over year. That's an impressive growth, right? This type of growth rates were maybe more common in 2021, but for 2022, there are fewer and fewer companies that are delivering this kind of robust growth, and Datadog is one of them. So we had about 23,200 customers. That was up from about 18,800 last year. Nice. So they're increasing their revenue by increasing the number of customers. Okay, that's good news. And then also they've got 2,780 customers with ARR of 100,000 or more. ARR is annual recurring revenue, and that was up from about 2010 last year. Okay, so not only are they adding a bunch of new customers, right, nearly 5,000 new customers or 4,400 new customers, but they also increased the amount of customers that are spending more than 100,000 per year. So that increased by 770. So it went from 2010 to 2,780. So that's really good news. That's really good news. You're getting new customers and you're getting existing customers to spend more. That's great news. Their biggest customers generated about 85% of their annual recurring revenue, which is not too concerning because there's 2,780 of them. There are some companies like I'll mention C3.ai. That company gets about 50% of their revenue from one customer. That's a little bit concerning because that's a very high degree of concentration risk. This is not to that level because they have 2,780 customers generating about 85% of ARR. Going on, he says they generated free cash flow of 96 million with a free cash flow margin of 21%. That's even more impressive when you consider that the company grew revenue at 44%. You can find a lot of companies with a free cash flow margin of 20% or higher, but relatively few of those companies will also be generating 40% or more revenue growth. So this makes Datadog unique in that it's growing revenue robustly, but it's doing so responsibly. It's not just throwing a bunch of cash at the situation trying to grow revenue. Their dollar-based net retention rate continued to be over 130% as customers increased their usage and adopted more products. Net retention rate of 130% means existing customers, if they spent $100 last year, spent $130 this year. So that's 130% net retention rate. That's good news again, because that reiterates the point that not only are they getting new customers, but existing customers are spending more with DataDog. And that's good news because it demonstrates that existing customers see good value in spending with DataDog. Otherwise, they wouldn't increase their spending, right? So they sign up with DataDog, they get their services, they see what their services deliver, the value that the services deliver, and they like the services enough that they're increasing their spend with Datadog because those purchases are bringing in the return on investment that's more than adequate. So all good news so far in this first section of the earnings call. Going on, saying overall, we observed slower usage growth with existing customers. So while the growth was increasing, the rate of increase was slowing. So they attribute that first to a continuation of cloud cost optimization by our larger spending customers. So what we've noticed in mid 2022 and onward is that large companies have begun to control costs, right? You've heard a lot of layoffs, you heard a lot of cost cuts. One of the areas that costs are getting cut are in these kinds of services, cybersecurity, cloud computing. These are, they're not totally discretionary, but within the cloud computing and within the cybersecurity spending, you can reduce, nip and tuck certain areas and reduce spending. And that's what we're seeing a lot of companies doing, is going into these areas, looking at where they can cut costs. And Datadog is experiencing a slowdown from their largest customers saying, they're reducing their spending. From a product perspective, we didn't see any meaningful differences among our major products as they all experienced solid growth, but they're all decelerating over a year-over-year basis. Okay, so they're still growing, but that growth rate is slowing. And highlighting that their sales pipeline remains healthy. That's good news that they've got projects and contracts under negotiation that may get closed. And so as a data point, as of January of 2023, 37% of Fortune 500 companies are Datadog customers. That was up from 30% last year. So that's really a good sign. If you're looking at investing in Datadog, you see that Fortune 500 companies are adopting Datadog services. That tells you that they are reliable, they deliver good return on investment, and they're catching favor with some of the most powerful companies in the world today. Churn has remained low. That's good news. That means existing customers, the cancellation rate within existing customers is low. That's good news. And during the quarter, they released their latest product to general availability, which is their universal service monitoring. Now, I will say something about Datadog. They have been rolling out, they're really good with innovative products. They're rolling out several new products. And I would say maybe they're a little too fast. Like they're rolling out products that might be ahead of the game at a time when companies are kind of not investing aggressively in these types of products, right? We mentioned earlier that since mid 2022, large companies are pulling back their spend. So I would like, maybe Datadog to reduce their R&D spending, to slow down their product development. Let the industry catch up with them. Let the clients, catch up with them. And so they can reach higher adoption of existing products instead of continuously rolling out new products, right? So that way it will allow Datadog to get a greater return on investment on their research and development investment, right? If you're always rolling out new products, you don't give time for your older products to bring in the revenue and profits to justify the spending to develop those products, right? If you develop a newer model, a newer service, customers are less likely to purchase your older service. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So they ended the quarter with 17 generally available products. That was up from 13 at the end of 2021. So yeah, I mean, kudos to their R&D team. They're definitely coming up with products. They're definitely making use of their time. They're not just spending on R&D and not getting any return on that. But the return is so robust that I would suggest a slowdown to those investments and harvest more of the profitability in those areas a little bit longer, a little bit for an extended period before you launch new products on top of those, right? And especially now that the market is more focused on profitable growth, on free cash flow generation, I think the company can deliver better value to shareholders by slowing those investments in R&D. But that's just my opinion. I could be wrong in that estimate, in that it may be delivering such good returns on those investments that it would make sense to continue that R&D spend. So I will end with these final comments here. The CEOs is talking about the outlook for their next fiscal year. They're saying, although we are seeing customers be more cautious with their cloud usage expansion in the near term, we see no change to the long-term trends towards digital transformation and cloud migration. So in other words, look, this is going to happen, right? Companies need to transform digitally. They need to migrate to the cloud. Now, whether they do this over the next 3 years or whether they do it in the next 5 years, that hasn't changed. But what has changed is the slowdown, right? It went from expecting this transformation to happen sooner, from now this transformation is expected to last longer to be realized. Still, given the large opportunities we see in front of us, we plan to keep building and innovating. Yeah, and we mentioned they're already getting, they keep launching innovative services, innovative products. They've demonstrated an ability to do that. That's a strong case for investing in DataDog stock, is that they've demonstrated that they could keep innovating, right? They're not going to be this one trick pony where they delivered one really good product and they're not going to be able to build on that, right? They've shown you they can go ahead and they can build new products and new services that the market really wants. And so we have, since founding DataDog, we're also balancing long-term investments against maintaining the discipline to ensure our continual financial performance. That's reassuring. That's good to hear from a shareholder perspective, that they're not gonna they're not gonna just look to growth at all costs, but they're gonna balance growth with profitability, with sustainability, with financial performance. And they've shown us that with their free cash flow margin over 20%. So you can trust that they have been doing this over time. All right, so that's all I've got. I hope this video shed some insight into what's going on with DataDog stock, a spectacular growth company with excellent free cash flow margins. And if you like this video, I'm gonna link to a few other videos that I've done at the end of this one that I think you'll enjoy. So please click on one of those and I'll see you over there. Thank you for watching.